Okay, so we are starting chapter 12 today. So chapter 12, it's about partnership. Okay, it's about partnership. So what we can learn from this chapter? So we want to learn the characteristics of the partnership form of the business organization. So in the previous chapter, we have learned there are different business organizations. They have a sole proprietorship, you have a corporation, you have partnership. So what is the feature? What is the characteristics of the partnership? We want to understand how to form a partnership, how to allocate and record the profits or losses to the partners, how to prepare the partnership financial statements. We want to understand how we can accept new partners. How can a partner retire from the partnership, and how can that whole partnership business organization be liquefied? Okay. So the first is the characteristics of the partnership form of business organization. Okay. So we can describe the characteristics of the partnership based on different aspects. Associations of individuals, co-ownership of property, division of profit, limited life, mutual agency, and unlimited liability. So we are going to take a look at this. Association of individuals. So this partnership is usually based on a written agreement. Okay. So basically, there are more than one person. Okay. They sat down and they decide to agree to form a partnership. So the ruling document is called a written agreement among the partners. So that is the most important document for the partnership. Partnership is a legal and accounting entity. That means partnership has its legal rights, responsibilities. Okay. And partnership has to prepare a financial statement, but partnership are not taxed. So any income earned by the partnership will not be taxed. Instead, that income earned by the partnership will be allocated among the partners. So the partners will report this income in their T1 return, T1 personal return. Okay, now co-ownership of the property. Assets are jointly owned by partners. So if you think about, let's say, three dentists, okay, they formed a partnership. They opened a dental clinic. Okay, so they have a property. Sometimes they rent, sometimes they own the property. They build their own property, right? So that building property are jointly owned by partners. Division of profit. So you have a profit. How this profit will be allocated by partners, okay? So partners has to agree ahead of time what is the way to divide profit or loss. Okay. Sometimes it just divided equally. Everyone received the same share. but there could be other different type of allocation, right? Some partners might be more experienced, have more knowledge, have more client. So those partners probably will be allocated with more profit, right? But the point is, on the partnership agreement, the division of profit has to be decided and agreed upon. Limited life. So partnership has limited life. Partnership will end when change in ownership. Partnership ends when change in ownership. New partnership can be formed to continue business. Okay, so when you have a change in ownership, so the previous partnership ends, and you have a new partnership be formed. Each partner acts for or bans the partnership. Okay, so every partner has to work for the partnership, right? Each partner, if they do a good job, right, they bring glory, they bring fames, reputations to the partnership, right? And then the other partners will benefit from the increase in the popularity, in the reputation. So each partner, right, they acts for the partnership. Unlimited liability. Each partner is liable for all partnership liability. Okay. So, but there are, this is the unlimited liability, but there are limited partnership. Okay. So for example, a lot of the accounting firms, right, you probably will see LLP, limited liability partnership, right? For example, MNP, right? MNP is a partnership, one of the large public accounting firm. So MNP is a limited liability partnership. So some of the partners working with MNP has only limited liability. What does that mean? That means, if the partnership is not doing well, they are losing a lot of money. So the partners with limited liability, the worst scenario is they will lose everything they contribute to the partnership. But for those with unlimited liability, if they were, let's say, if they lost in a lawsuit, they can lose everything. They can even lose their house, their car, their clothing, their valuables, right? So that's why people like limited liability, right? So unlimited liability expose your personal life to a risk, right? So that's kind of the characteristics of partnership. So what is the advantages and what is the disadvantages? Okay. Advantages of partnership would be you have more resources, right? So let's say I'm a professional accountant. I specialize in auditing, right? And another accountant, right, CPA, she specializes tax. Okay. So if me and her get together to form a partnership, right? So now this partnership can do either audit or they can do tax, right? You see, it's a combination of skills and resources, okay, of more than one individuals, right? So in that way, you have more influence, right? When people speak of a partnership, they would say, well, yeah, they can do everything, right? They have lots of talents, they can do different types of works, right? Auditing, accounting, right? And tax. If I'm by myself, right, I probably don't want to take any tax work because I'm not specializing in that area. Another advantage is it's easily formed, right? Like I mentioned, um, you know, the written agreement, that is the partnership agreement. So that's the document. If all the partners sit down, they figured out, they agreed with on that document, then you can easily form a partnership. Has fewer government regulations and restrictions than corporations. So corporations, okay, they have higher level of government regulation and restrictions. And partnership, they are not responsible for tax, right? So they are more flexible. They don't have as many regulations. Allows for easier decision making. Okay, allows for easier decision making. So a corporation, if you have lots of shareholders, sometimes it is hard to make a decision. People have different opinions, right? You have a broad range of different investors with different background. They have different interest, right? So it's hard to reach a decision. Partnership, it's easier to reach a decision. Disadvantage. First one is the mutual agency, right? So if your partner did a bad work, right? So what happened is your partner is damaging the reputation of the partnership, which will negatively affect your reputation because you work for the partnership, right? So everyone can do good things to make the partnership better, or if one person, they could ruin the partnership, right? And you will be affected. So the mutual agency, right? Limited life, right? In comparison to corporation, the ownership can be easily transferred through buying, selling the shares, right? But for partnership will end when partnership ownership changed. Unlimited liability, right? Some partners have to be a partner with unlimited liability. So that's the part people don't like, right? People don't want to put their personal life, right? Their houses, cars, right? Clothing, you know, shoes, right? They don't want to lose everything, right? So unlimited liability is a disadvantage. Partnership agreement is a written contract between two or more parties to form partnership. So this agreement will contain some basic information such as the name and of each partner or company, right? Main location. So it doesn't have to be person to be a partner. Partner can be a corporation. Okay, so the name of the person or the company as a partner and their location, their address, and what's the purpose of the business, right? Is this a partnership to provide accounting services or to perform dental services or perform legal services? Date of inception. When is the first day, starting date of this partnership? That written document also specify the relationship of partners. Okay, so what is the names of the partners? What is their capital contribution? How much money did you contribute to the partnership? Did you, contribute a building, a piece of land, equipment, right? Or you contribute your expertise, right? You can, let's say, you are able to do the web design maintenance, right? So maybe your time, your effort is your contribution, right? And what are the rights and the duties of partners? So as a partner, what is your right? Okay, you have the right to be entitled to the profit, right? What is your duties? What is your duties? Right? What is your obligations, in the partnership? Basis for sharing profit or loss. So at the end of the day, the partnership will make money. How that profit or loss will be divided among the partners. And then procedures for admission, withdrawal, death of partner. Well, they have to be able to very clear, right, in terms of how can they take a new partner, because all the partners will die. They probably will decide to withdraw their partnership interest, right? So the partnership agreement will specify the procedures for treating these scenarios. What if there is a dispute among partnership? They don't agree with each other. What is the procedure to resolve those disputes? And what is the procedure to terminate that partnership, right? So these are the document, partnership agreement. And if you really want to understand about the partnership, so you can just ask them, can I please read your partnership agreement, right? So that would provide all the information you need to understand the business. Okay. So does anyone have any question about this? Do you guys have any question about the topic I've been talking so far?
No.
No? Okay, good. Thank you.